Hey everybody, I'm Nick Morgan, president and co-founder of ICAN, Investor Choice Advocates Network, and co-host for today's Capital Ideas, where we celebrate the ideas and innovators improving access to capital markets for everyone.
And I am Dara Albright, and I'm the co-host of Capital Ideas and a very proud board member of ICAN. And we are so happy to have with us today on Capital Ideas Brian Anderson, who is the CEO of Raze Finance, which is an innovative platform that is leveraging blockchain innovation to modernize the capital raising efforts for companies today. And with that, thank you so much for joining us today, Brian.
Thanks for having me. I really appreciate the opportunity.
Yeah, well, great to have you on. I love what you guys are doing, and thought maybe you could start by talking a little bit about why would an equity issuer today even want to add a tokenization element to their capital raising efforts?
So I think there's many reasons depending on which direction an issuer is coming from. I would say I will speak right now first to this question in relation to the broader market and to maybe the folks that are maybe not the most obvious candidates, and that would be any company that is struggling to raise money, any company that is stuck in this market. This is one of the most brutal markets to raise capital for many factors. I would say that tokenizing securities, using blockchain, using new technologies like this to be able to go to market, it really does a few things. A company would consider this to differentiate themselves, stand apart, do something different than the norm that's not currently working for most issuers. I'd say another reason would be to offer something better for their investors, something different, something novel, such as potentially more liquidity or a different structure. And then also to be able to reduce their costs to acquire that capital and look at efficiencies in the capital allocation process. So those would be the most obvious things for us that we look at.
Yeah, and liquidity is definitely an issue that a lot of issuers face and investors face, when they get into an investment. One of the things that we talk a lot about on the show, or at least recently, we've been talking a lot about, the secondary platforms and marketing. And when it comes to marketing a lot of these initial offerings. So maybe you could talk a little bit about how some of these issuers are able to leverage technology to enhance their outreach and to gain more investors, close more investors, and all of that, because that is what we need to create liquid markets.
Yeah, I think that the private markets for eons have been considered to be archaic and mostly, analog or paper-based on purpose, compared to the public markets, which have been digitized since the 80s or so. And so it's a very, it's the simplest way I like to explain it is, I can pick up my phone and make a trade in a matter of a minute or two using an app on the public markets, but try doing that in a private deal. Good luck. It just doesn't work that way. Trading is not necessarily affiliated with most private markets or private deals. And so therefore, the archaic and high friction kind of situation that you're dealing with when you're investing or when you're trying to raise money in that market just is the nature of the beast. But as tokenization has come along, it's opened up this door. We're not there yet. We have a long way to go, but it's opened up to this door to be able to leverage technology innovations in a far more dramatic and faster way. So for example, we all watched all the ICOs years ago and all the tokens that launched. And it was amazing because you could have these founders that didn't even have a good idea, but if they had good marketing and a website and a community, they could raise millions of dollars on a token. Almost like crowdfunding or going public. And so all of us in the private markets, we look at that and we're like, geez, why can't we have some of that? We don't want all of it because it turns into scams and, bad actors and things like that. But there is a sense of, why can't there be some different way to do this, and why can't there be liquidity? And so I think what tokenization has done is the first step is it's changed the nature, it's disrupted the norm by saying, yeah, you think that you want to go to market this way, but have you considered another way? The internet did that in a big way. And so what we look at now with tokenization is how can I present my deal that is going to attract different investors, global potential investors, if I want more of a broader reach? How can I raise with my community differently, better? And how can I get out of the trap of saying I have to do it a certain way? And that trap is if you get past your first few people that you know that may want to invest because they know you, then what? Right? Then it becomes unless you're the 2% that gets a venture capital infusion, the 98% is stuck with trying to raise from strangers in the most highly competitive environment for fundraising right now.
We noticed a recent announcement of a partnership that you entered into with an alternative trading system. Can you talk a little bit about that and how that fits in with your innovations and sort of moving things toward the blockchain?
Yeah, Texture Capital is a fantastic partner. Their CEO and founder, Richard Johnson's been in this market for a long time and is a real innovator and leader. And, one of the things that I think attracted him to us and vice versa was that we were really focused solely and will continue to be focused on issuance. So enabling companies to issue securities on chain legally, but actually in an effective, like real way, not just talking about it. And they have moved, although they're also an issuance platform, they're moving towards a focus on secondary token trading. Well, you can't have a secondary market without issuance. And I think that's where all the ATSs have really struggled is there's just not enough deals that even are worth putting on a secondary market, let alone trying to find the buy side for them. And so if we can create on the issuance side more novel investment structures, we raised our first capital on a revenue share token that was with accredited investors. And the intention, and which is now happening, is that we can now start paying distributions or dividends off of our revenue to investors from the initial issuance, right? Well, that's a really great, attractive, potential liquidable investment that potentially, if we wanted to one day, we could allow that to be traded on the secondary markets. That's just an example. So we're waiting for the market to come up with these new ways to attract investors. And I think once that starts happening, then we'll be able to show companies like Texture real deals that are looking for that secondary. Also, very specifically, the partnership we have with them is beautiful because what it does, they're a broker dealer, they're an ATS. So a company can come through us. They don't have to use a broker dealer. Most don't need to in Reg D issuance. And Texture is going to be able to give us the ability to offer right on the onset that issuer the ability to say, yes, I would like to consider offering a secondary market for those tokens to my investors. So if an investor knows right on the onset that in 12 months, roughly, their token potentially could go up on a secondary, I think that changes the conversation right away on the beginning. The other thing they're doing for us is we can leverage their broker-dealer rules. And as of today, we can now support crowdfunding, Reg CF for actual tokens, which I don't hear anybody talking about. And I don't think it's been done before. We would not be the first, but it's not leveraged. So I think there's something pretty big there.
You've mentioned Reg D, CF, secondary trading, primary issuance. All of those come with something that we're focused on at ICAN, which is some of the regulatory barriers, some of the things that someone has to deal with when working with the SEC. Of all those things, what would you say are some of the biggest regulatory challenges in the space you're operating in?
Well, I would say it depends who we're serving. If we're serving a Web3 company that's trying to operate in what we call the normal financial world, it gets very sticky if they have already issued a utility token or they have a thought of doing that, because there is a premise that they want to raise money with that token, even though they're calling it utility or revenue based. And I think it puts them in a very gray area. Whereas what you couldn't do, and some people have done this, is you can say as a Web3 company, we've got our utility token, but we're raising money with a security token. And that, I think, is a beautiful combination of leveraging both sides of the fence, and it sits right in that regulatory world. If you're a non-Web3 company, or you're just a regular company, I think very rarely do I get on calls with founders or CEOs that talk like we're talking. They're just like, I just want to raise money. I kind of know what a safe is. I eventually want to sell my equity. Where do I start? Right. And so by introducing tokenization, we have to show the benefits first instead of making the token the hero. Because if we make the token the hero, they're going to think crypto, and then they're going to start running into all the regulatory issues that they see in the news.
But it sounds like the Howey issues that started with the Dow report and even going back before that are still with us. It sounds like we could use some more clarity on that issue.
Yeah, I think that until something changes, it's like a couple of my attorneys, and one in particular told me way back when we started this a couple of years ago, is he said, a security is a security, the SEC is not going to change it. And he said the only thing they're going to do is provide some maybe clarity or benefits to digital tokens, which we all want. But at the end of the day, if you're raising money, I don't think the SEC is going to change a lot of their longstanding views on this. So let's take the tech and let's bring it into that world, and let's show them how to use it in the right way. And then I think we'll start seeing things like tokens maybe becoming public offerings much faster, which is what we want, right? And that's where I think we've got real opportunity.
That's great. Well, it's an exciting model you have. And I guess, Dara, we'll keep an eye on Raze and maybe check back in a few months. But thank you so much for being on the program. Thank you, Dara, of course, for hosting. And to everyone else, if you want more information about ICAN, go to icanlaw.org. And otherwise, we'll see you on the next Capital Ideas. Thank you.